7:35, time to focus on business. Our business editor, Mike Eppel, joining us this morning. Mike, the TSX, Bay Street back to work, looking to stay in the black today.
Yeah, we'll see if it actually trends to the upside, though, Ted, after yesterday. Of course, it was a holiday for the Canadian markets. Well, Wall Street was in full activity, and Wall Street saw a bit of a tumble yesterday with the Dow down close to 100 points. So does our TSX trade on a catch-up basis to what we saw yesterday, or does it trade in the fundamentals this morning? And speaking of back to school, by the way, first off, Shudder. To think about that already. But at the same time, look, that is an important part of the Canadian economy, consumer spending, and it's, again, this dollar valuation, as low as it is, does this actually help the Canadian retail segment? The start of the year was pretty difficult, considering the shutdown of Target and so many other brands. Are we looking for a second half rebound, and could that be a positive economic signal, something to watch? We did see the Greek stock markets trade for a second day today. They sold off big time yesterday in that return after the multi-week shutdown. The Athens benchmark in Monday's trade down 16%, down another 2% or thereabouts today. But it's the bank stocks hardest hit. Limit down many of them by as much as 30% for a second day. Tough to value what exactly any of the assets in the Greek banks are actually worth right now, considering the fact that the country is basically bankrupt and needs the help of its Eurozone partners on the bailout. So everybody's trying to figure out exactly what to do with any of their investments in the Greek financial markets. We have been watching the price for oil slide here, as yesterday it dropped to about 45 bucks a barrel. A little bit of a recuperation so far today. The benchmark out of Europe, the Brent North Sea crude price at about 50 bucks a barrel. It is still unbelievably weak for oil because, what did we find out Monday? OPEC pumping at record levels for the month of July. So the oversupply scenario continues. Later today, we'll get the American Petroleum Institute update on inventories, and tomorrow the Department of Energy reports as well. Big automakers reducing their sales expectations out of China. The latest to do so, BMW, which actually says that China is now its largest auto market. That's quite remarkable considering, but it's the fact of the matter is many of the automakers are now dependent on Chinese sales to boost their profit margins, and sales have been slowing a little bit. So we're tracking that for the economic and global implications for the auto industry as well. Apple shares coming off a loss yesterday and this morning, down again in the opening trades, below the 200-day moving average. The tech titan seeing a little bit of selling pressure in the near term. Twitter starts the day at a record low for the share price, around 29 bucks a share U.S. And Disney reports earnings after the bell tonight. That stock has hit a record over the past several trading days. It is priced for perfection. They're expecting big movie revenue generation. You got the Avengers, the Frozen paraphernalia still being sold, and of course the upcoming Star Wars movies. The only weak spot could be ESPN for the Disney empire. Something to watch. Ted, back to you.
All right, good stuff. Thank you, Mike. That's our business editor, Mike Eppel, reporting this morning. You can hear Mike on 660 News at 26 and 56 after the hour.
BT's Market Report is brought to you by 660 News.